Okay, good day, everyone. Welcome to Module 25, and this is going to be the last session for this particular masterclass. So today we will explore the future trends in transfer pricing, a critical and evolving aspect of international taxation. As we delve into this topic, we will examine the emerging issues, key challenges, and the role of technological advancements shaping transfer pricing strategies for multinational enterprise. So here is the last module for this masterclass, module 25, future trends in transfer pricing. So let's begin by understanding the emerging issues and challenges that multinational enterprises are facing in this complex landscape. Now, the digital economy. The digital economy has brought about significant changes in the way businesses operate, particularly in terms of intangible assets such as intellectual property, data, and digital services. Now, intangibles and data. In today's digital world, the value of intangibles like patents, trademarks, and especially data is critical in generating profit. However, accurately assessing these contributions presents challenges due to a lack of comparable market data. Traditional transfer pricing methods struggle to measure its contribution effectively. Now, value creation. A key question arises: where is value created in the digital economy? Now, digital businesses often deliver goods and services globally without a physical presence in many jurisdictions. This complicates the allocation of profits among the jurisdictions, leading to tax disputes. So, as we navigate the challenges of the digital economy, let's turn our attention to another crucial issue in transfer pricing, which is base erosion and profit shifting, or BEPS. Now, the OECD BEPS initiatives aims to address profit shifting to low tax jurisdictions, which has led to increased documentation and compliance requirements for multinational enterprises. Action plan implementation. BEPS requires multinational enterprises to restructure their operations to ensure that profits are taxed where value is created. This is a significant shift from previous practices demanding enhanced compliance efforts. And also, the introduction of country by country reporting requires greater transparency from multinational enterprises. Businesses must now disclose more information about global income, profits, and taxes paid, increasing the burden of compliance. So, as BEPS reshapes transfer pricing, governments are also focusing on economic substance to ensure genuine business activities underpin tax structures. So, going to economic substance now, tax authorities are increasingly enforcing economic substance rules to ensure that tax structures reflect real business activities rather than artificial arrangements. Now, jurisdiction now require proof of substantial activities such as operational presence, decision-making process, and staff involvement to justify profit allocation. With respect to functional analysis, it is crucial that the functional analysis accurately reflects the real economic activities of the business. If not, it could trigger disputes with tax authorities, leading to penalties or double taxation. So, another key development we must consider is the impact of the global minimum tax. The OECD Pillar 2 initiative, which introduces a global minimum tax, is designed to curb profit shifting to low tax jurisdictions. This will have significant implications for multinational enterprises. Now, MNEs or multinational enterprises will be required to pay a minimum level of tax on their global profits. This aims to level the playing field and reduce tax avoidance by discouraging the use of low tax jurisdictions. And to meet the reporting requirement, let's look at reporting requirement now. To meet the reporting requirement of the global minimum tax, multinational enterprises will need to update their compliance frameworks and ensure that their transfer pricing strategies are in line with these new rules. Going to the key challenges in transfer pricing, complex regulatory environment. Transfer pricing has become more complex due to increased multilateral cooperation and a fast-changing regulatory landscape. Now, as tax authorities around the world work more closely together, multinational enterprises faces more stringent scrutiny. This requires transfer pricing strategies that are consistent globally, yet tailored to comply with local laws. So these are some of the okay. Now let's go to another one. Apart from the multilateral cooperation, still talking about the complex regulatory environment, let's look at dispute resolution. The complexity of cross-border transactions often lead to dispute with tax authorities. Mutual agreement procedures are essential for resolving these disputes across jurisdictions. Now to the second one, intangible assets and intellectual property. Intangible assets such as intellectual property are often challenging to value accurately. Intangibles are unique and their valuation lacks clear market comparables, which can lead to disputes over transfer pricing between multinational enterprises and tax authorities. Multinational enterprises must ensure that transactions involving intangibles comply with the arm's length principle. This means pricing should align with what independent entities would have agreed under similar circumstances. With respect to technology disruption, technology is playing an increasingly significant role in reshaping transfer pricing practices. Automation and artificial intelligence are transforming the management of transfer pricing processes. Artificial intelligence can handle routine tasks like data collection, but it also presents new challenges in ensuring compliance and accuracy. By using advanced data analytics, multinational enterprises can better identify trends and mitigate risk in their transfer pricing practices. However, these tools require continuous updates and integration with compliance systems to be effective. So let's go to technological advancement in transfer pricing. Now, automation and artificial intelligence, by automating repetitive tasks such as data collection and compliance tracking, multinational enterprise can reduce manual errors and focus on more strategic decision making. Artificial intelligence algorithms can analyze large data sets to identify patterns and trends, helping multinational enterprises to refine their transfer pricing strategies and improve risk management. On blockchain technology provides immutable and verifiable records of intercompany transactions. This ensures that data used in transfer pricing remains accurate and tamper-proof. With respect to smart contracts built on blockchain platforms can automate intercompany agreements, reducing the need for manual intervention and enhancing compliance. Number 3, advanced data analytics. So multinational enterprise can use data analytics to monitor their transfer pricing activities in real time, identifying discrepancies or risk before they result in compliance issues. Now, with respect to benchmarking and comparability, data analytics allow for more accurate benchmarking of comparable transactions, ensuring that pricing aligns with the arm's length principle. Now, if we look at cloud-based solution, cloud-based platforms allow multinational enterprises to scale their transfer pricing processes as needed, providing access to critical information from anywhere in the world. So integrating with ERP system. So by integrating transfer pricing system with enterprise resource planning solutions, multinational enterprises can streamline data management and improve compliance and reporting. So let's look at policy recommendation and best practices. It is important to align with global standard. Ensure that transfer pricing policies comply with the latest OECD guidelines and BEPS recommendations. Staying updated on global tax rules, especially those affecting digital economy and global minimum tax, is very crucial. Now, maintain detailed and comprehensive documentation, including master files, local files, and CBCR reports. Proactively disclose transfer pricing policies to tax authorities to minimize the risk of disputes. It is also important to conduct regular reviews and audits of transfer pricing practices to ensure compliance. It is also essential to invest in the ongoing training and development of transfer pricing professionals. So use automation tools to reduce manual tasks and improve accuracy. Advanced data analytics should be used for better benchmarking and real-time monitoring of transfer pricing transactions. So let us now, okay, that is with respect to leverage technology, where you use automation tools to reduce manual tasks and improve accuracy. And then advanced data analytics should be used for better benchmarking and real-time monitoring of transfer pricing transaction is also very key. So best practices now, integrated approach, foster cross-functional collaboration between tax, finance, legal, and operations teams to ensure a consistent approach to transfer pricing. Align transfer pricing strategies with the broader business objective. Then, with respect to risk management, identify and mitigate potential transfer pricing risk by using advanced pricing agreements and staying informed about regulatory changes. Proactive engagement with tax authorities is also important. You should maintain open and transparent communication with tax authorities to build trust and to facilitate smoother compliance. You can also use the mutual agreement procedure to effectively resolve disputes. So now, best practices for intangibles. So we need to also ensure accurate valuation of intangible assets using appropriate methods and maintain detailed documentation to support arm's length principle in transactions involving intangible. So you need to also adopt best practices for that. So as we have discussed, the future of transfer pricing is shaped by both emerging regulatory trends and technological advancements. Multinational enterprises must adapt to new rules around the global minimum tax, BEPS implementation, and economic substance requirements while leveraging cutting-edge tools like artificial intelligence, blockchain, and data analytics. So by adopting forward-thinking policies and best practices, multinational enterprises can ensure compliance, optimize their tax strategies, and remain agile in this rapidly changing environment. So these strategies will not only help them to align with global standards, but also reduce risk and support their overall business goals. Now we've come to the end of this masterclass. Thank you very much for your attention, and thank you very much for subscribing to our masterclass. God bless you. Thank you.